Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand what we see in the global landscape. We haven't made a lot of adjustments as we went into this new quarter in our portfolio because relatively strong are the sectors that we're currently in. We continue to avoid gold as one of the weakest sectors out there. In fact, gold hit a 52-week low again yesterday. I've talked about this repeatedly throughout my updates on Wednesdays about we stay out of relatively weak asset categories, we stay in relatively strong asset categories. We sold gold over 3.5 months ago, or approximately thereabout, and gold continues to make new lows. One of the things that works effectively in a portfolio is called relative strength. Our whole portfolio style, our global tactical portfolios across the board rotate always into those stronger sectors. And a stronger sector from time to time might be cash. It could be short-term treasuries. It might be gold. We look at all categories, not just stocks and bonds and not just stocks and bonds of the U.S., but currently we are in small and mid-cap and large cap in the U.S., which seem to be the predominant leaders on the equity side around the world, in addition to small cap emerging market. We continue to avoid intermediate and long-term bonds in all categories simply because they're relatively weak. The economy continues to get a little bit stronger over time. We're seeing the emerging market economy stronger, but their stock market is weak. Again, I made a comment earlier that we own small cap emerging market, which is strong, but large cap emerging market is weak, so we can continue to avoid that. Our income areas that we are in right now, we continue to hold, and they're actually relatively, again, strong. We continue to own emerging market bonds, preferreds, mortgage-backed REITs, and we also own some areas in the oil side for income purposes. Generally speaking, the areas that we continue to like, and they continue to be relatively strong. If things change within the landscape and the global landscape, we're going to make adjustments to our portfolio accordingly. Remember, our number one priority is risk management. We want to make our clients a return, but we also want to return their money. One of the things that I think is important to note as we continue to see Ben Bernanke keep rates low, he has essentially stressed that they're going to keep their bond buying program in place until effectively we see unemployment down around 6.5%. You could be talking 2 years, maybe more, for that to actually happen. We continue to see new investors come into Resney Wealth Management every single month, not only through referrals, but also through our TV and our radio show, which both have been a huge success. If you know anybody who's not happy with their portfolio or the lack of the management of their portfolio, we always appreciate your referral, so again, keep us in mind. If you have questions about your portfolio, please call our office or schedule an appointment. We always enjoy keeping our clients up to date, and if that means doing a formal update in the office or even on the phone if that's more convenient, make sure you set something up. We want to make sure that you're well informed about your money and that your money is moving in the right direction. Again, call us if you have any questions, and make sure you have yourself a safe and profitable day.